Hi guys, Gordon Hanks here with Team Hanks of Berkshire Hathaway Home Services. We are your real estate professionals in Oregon. Glad to have you aboard. Tonight, we've got a guest coming on. This is Jay Couron. Jay, as you probably know, is with Umpqua Bank. And he's here to share some insight into the lender's world of real estate transactions. So, but before we get started though, guys, in case you don't know who I am, my name is Gordon. I have been in real estate for about 15 years. Just after I started, I got busy and got my wife involved. We got busier, and then we got our daughter involved.
It's 7 o'clock.
It's 7 o'clock. And and we became Team Hanks. Excuse me. We have been blessed with a lot of real estate successes over the years. And part of what we're trying to do with this series is to share some of the insight that we've gained from younger, newer buyers. And not even that, just people in general who have questions about how the whole transaction thing works. Whenever I get asked a lender question, I always defer to a professional because I don't think that I'm a dentist. I'm not going to work on somebody else's teeth. I think that when you ask a financial question, you need a professional finance person. I deal in real estate. I'm not so much a finance guy. Real estate and the financial end of it, it all changes. Everything's always changing. And if you're not in that profession, then you're not really qualified to talk too much about it. So anyway, but before we get Jay on here, I want to let you know that you probably ought to tag somebody else, especially if they're a new buyer. This whole series is pointed toward them. They need to be hearing this. This is some good stuff. Always feel free to comment. We like the wow faces and the thumbs up. We really dig all that stuff. So feel free to ask away. What we've got is a pre-recorded message from Jay. We were down, he was on a phone with me yesterday in a phone interview. And he's sharing his insights into the lender world, and that's what we're going to do today. And like I said, if you got any questions, feel free to ask away. We'll make sure that they get to him. Thank you very much. Hi, Jay. Thanks for joining us. I appreciate it. Jay, can you tell us a little bit about what it is you do?
Yeah, Gordon, I'm a mortgage loan officer, and I've been doing this for about 17 years now.
Great. I know that you and I have worked together in the past doing a lot of different deals, but let's pretend for a second that I'm a first-time buyer and I plan to come to see you about a loan. What is it that I should expect? Do I need to bring anything?
Well, yeah, there's always, it's helpful to have some paperwork with you. What we always like to see is 2 years of W-2s, 2 months of bank statements, and then 1 month of your pay stubs.
Okay, that sounds simple enough. Okay, so let me ask you a little bit more about this thing. I know that there's more than one type of loan. Can you tell me about the government loans? What's the difference between a USDA, a FHA, and a VA loan? And what are the interest rates like for each?
Well, the interest rates on those are all very similar, usually about the same, actually. They are great loans. I mean, USDA is a zero down product. It's not available in every area at the zero down, but Douglas County, it's wide open here. There's no restrictions on location. So it's a beautiful loan for first-time home buyers. FHA does require a down payment, 3.5%, but FHA works really well for manufactured homes, and it also allows for a few more credit issues if you don't have perfect credit. And VA it's a beautiful loan. It's a great benefit for veterans. With the VA hospital here, I see a lot of them, and they are a beautiful product. There's no mortgage insurance with them, and the interest rate is lower than conventional, so it gets veterans into homes for a lot less on a monthly basis.
Great. Okay, so I've always heard that I need 20% down to buy a home. Is that correct?
That is not. That is a good well, a good note of how it used to be in the past. But now conventional loans is what that referred to for the most part. They can go as little as 3% down for first-time home buyers with good credit. Standard, typical for conventional is 5% down. And basically, if you don't have the 20% down, you do pay mortgage insurance on a conventional loan. But once you have that 20% down, the mortgage insurance is not required. Or once you pay the loan down to 20% equity, there are ways of that mortgage insurance being removed. So it's not there for the life of the loan, where on your government loans like USDA and FHA, the monthly mortgage insurance is there for the life of the loan.
Okay, good. So let me ask you this, Jay. I guess, how do you figure out what loan type is best for me? I guess the home condition of the home would matter, right? So how do you figure out what loan is best for me?
Well, when we meet, I always prefer to meet with first-time home buyers in my office, and that way I can get to know you a little better, kind of understand your story, and go over your credit. We can look at it together, and that hands-on, face-to-face is always my preference. I know it's not always possible for people, but if it is, that's a great way to start, because then we can look at the different loan products, kind of decide which direction we need to go to get you what you need that's going to work best for you.
Okay, good. So if the home is in too bad a shape, can you get a loan on it? I mean, if it's really rough, is there a possibility of getting a loan on it?
Yes, there is. So a lot of like foreclosure properties are in not so good condition. And there was no way to finance those in the past, where now we have what are called renovation loans or rehab loans. There's both conventional and FHA products that handle that. And it allows you to basically build the repairs into your loan. So it's financed over the 30-year loan rather than either you or the seller having to come up with those funds. So you do have to work with a licensed contractor. You negotiate the best price you can on the home as it is, and then once we get bids from a contractor, we order an appraisal, and as long as those repairs all are supported by that completed value, then we've got a deal with a renovation loan.
Gotcha. Okay, Jay, I just got a few more questions here. Hope we're not bothering you as far as time goes. You got a few more minutes?
No, you're doing great.
Okay.
Oh, yeah.
Okay, so interest rates. I've been reading in the news that interest rates are probably on the verge of going up. I'm wondering how long it's going to take before they actually start spiking. And I'm assuming that now is probably the best time to buy with that in mind. Am I correct?
Well, no one has a crystal ball on rates and what's going to happen with them, but they're definitely trending upward with the economy that we've got going. It's I think in the long run, those lower rates that we had in the past were just not something that we could count on continuing. So what we're seeing now is more of the norm, and we probably are going to need to get used to it. Rates do change daily. They kind of follow the success of the stock market, and so when the stock market's doing well, unfortunately rates worsen because they're trying to offer more of a return to the investors that back those rates. So it's kind of an opposite effect, but rates don't seem to be slowing the market down. People still need to buy homes, and it's still a good time.
Gotcha. Okay, so is there a way that I can get a loan on my current home to buy an investment property, Jay?
Yes, and not just to buy an investment property, but also to maybe do repairs or whatever it is you need some cash for. There's what are called cash-out refis, and depending on the equity you have in your home, you can borrow against that, and it would pay off your current mortgage if you have one, or if you own your home free and clear, it would just become a new mortgage on your primary home. And the advantage to doing that is when you borrow against your primary home, the interest rate is going to be lower than when you purchase an investment property. So in the long term, the cost would be beneficial to borrow against your primary rather than an investment property.
Got it. So Jay, I at one point in time in my past, I had a bankruptcy on my record. And I know that at one point in time, it took 7 years to clear before that bankruptcy was going to allow me to purchase another home. Is that still 7 years? Do I still have to wait 7 years for that to happen?
No, you don't. And it's actually depends on the loan program that we're looking at. Each one kind of has a different time frame, but we can go as little as 2 years from when a bankruptcy clears now on a VA loan, and FHA and USDA have a 3 year. I'm sorry, FHA is 2 years, USDA is 3 years. So, yeah, it shouldn't stop you from buying. At least it won't take you too long to get past that bankruptcy hurdle. The key, though, is to rebuild your credit after the bankruptcy is finalized. A lot of people go through the bankruptcy but don't bother opening any new credit or trying that rebuild part. So it's best to hit that as soon as you can so that by the time those 2 years have passed, we've got a credit score that we can work with.
Gotcha. So ultimately, it'd probably be a good idea for me if I were in that position to come see you and get some advice. Can I do that? Would you do that for me?
Oh, definitely. It's always good to get a game plan. And, if I'm not able to qualify a borrower for credit reasons or income or whatever the reason, I like to at least come up with a plan so that we will be able to get you into a home. So the sooner we're able to get that plan in motion, the better off we are. And there's some first-time home buyer grants, and there's also some matched savings programs. So if we're sitting and waiting on a 2-year timeline, that's a great time to get in on those match savings programs because that would be your down payment when we're ready to go.
Great. Actually, that's a good segue into what we're doing next week. Next Friday night at 7, guys, we're going to be doing I'm going to be interviewing somebody about some of the programs. One of my most favorite programs is the Dream Savers program, and I know that they've got several more, and we're going to be bringing those out in our next episode. Jay, I wanted to tell you I really appreciate your time. I thank you very much for giving us just a couple of minutes live. Like I said, I appreciate it. That was Jay Couron, ladies and gentlemen, from Umpqua Bank. He's an old friend, and we've done probably hundreds of these deals together. So thanks a lot, Jay, and we'll talk to you later.
My pleasure, Gordon. Thanks for the opportunity. Take care.
Bye now. So, guys, that was a lot to swallow. I know it was. But what we do with these is I know it'll be on Facebook for a while, and then I'll archive it on hankshomes.net. So if you ever want to refer back to it, go back to hankshomes.net. It's going to be there for as long as I live, I'm sure. Also, keep in mind that whole series is sitting there. I mean, we've gone to inspectors. What we're trying to do is actually show people it's not that intimidating. All the information is right there. All you got to do is click a button and listen to the video. We've got qualified professionals in every field on that thing. Listen, folks, selling real estate is a complicated, emotionally driven, high-dollar deal. You need to be working with competent professionals in every portion of the arena. Jay is phenomenal. He's always been Johnny on the spot with us. And when you come to me and ask me who I would send out for a lender, I'm going to give you a list of names, okay? But I guarantee you Jay's name is going to be on that list. You can select whomever you wish. Hopefully you pick the right one. Anyway, thanks for visiting us. Hit that like button on your way out. See us at hankshomes.net. You can actually join us on YouTube, Twitter. Take care, guys. Most of all, take care of yourselves, and blessings. Thanks a lot, folks. Good night.